computer. I thought you couldn't record.
That's fine.
Oh, okay.
I'm not supposed to.
Oh, yeah, what are you doing?
Oh, I gotta share my screen.
Yeah. Hey, Eric, the owl's working really well, it looks like.
That's the
Really,
owl.
if I can't hear
That
you.
guy.
Oh.
That's because I fixed it this morning before you guys got here.
Ooh,
Look at
You plugged it
you.
back in again?
problem solver. Present full screen.
And then the purple.
I feel so old right now.
Happy Monday.
Behavioral I'm trying so hard, I'm so young.
Yeah. It's basically like the psychology of money.
Okay,
It's kind of fun.
sounds neat.
Yeah.
I don't like this here.
Are you gonna hide that?
Yeah.
I wish you can, I know I need to come up with something better.
I'll come up with it.
Down. I like it.
Looking down, yeah, there, on the green part,
On the green?
yeah, you can just go drag it just down. It should-
Fucking lost in this.
Yeah, okay.
It's about it.
It should be good.
Okay. Well, thanks for coming, everyone. We're gonna be sorry about my voice today, going in and out, so I'll try to work through this. We put together a class with a couple case studies. Kelsey is here to give us some input on ways that she's helped clients move on and purchase more homes and become real estate investors. And we collaborated and talked about what we've been seeing in the marketplace recently for a lot of clients looking to buy or sell or where to move their money, basically. So, Kelsey, this next slide is for you.
Lovely. I will just introduce myself. So I'm Kelsey Curtis, for those of you who don't know me. I'm gonna stand up.
Yeah, that's totally fine.
So I used to be a teacher, so I like being in front of groups of people and talking. But I've been in the industry for 8 years. I own my own financial planning firm. Holistic financial planning and wealth management. And really passionate about working with real estate investors and real estate professionals and how to make your practice better and how to communicate at a higher level than other agents are to your clients and making their client experience just a little bit more holistic, so that you're not just selling a house or creating a relationship. So yeah, I'm excited to be doing this with Leah today and talking through some stuff with you guys.
So, how does a financial planner help clients?
Yeah, so for me, financial planning, especially from the real estate world, is looking at options. So a lot of times my clients will come up to me and say, hey, I'm thinking about buying $500,000 house. I have this down payment. Do you think I can actually afford this? What does that look like for my overall plan? And what about if I need 600,000? Like, what does that look like? So how I work with clients is helping them do what if scenarios in their financial plan of, hey, here's what I'm thinking. Here's what this actually looks like in the long term, not just a purchase, but how it impacts the rest of my financial plan for the future and for now. So that's how I work with people, is being strategic, moving money how it needs to be. And like from a lending perspective of, okay, we have funds that are tied up in different places. Where are we going to be pulling these funds from strategically for your overall plan in order to fund the process?
And then for mortgage advisors, how you help us is kind of give them insight into like appreciation rates and the big picture overall. And we use a lot of financial planning tools like those mortgage coaches that I show you, so people can see the projected appreciation and the amortization tables. And then different strategies like temporary buy down, seller concessions, and we can craft something to make the monthly payment more affordable. And then how do you help agents?
Yeah, so one of the best ways that I can help agents, and I have a few that have my phone number and they'll just call me if they have like tax questions or they have implication questions for their clients, like, hey, they're looking at selling at this rate, or they have this cap rate on this multifamily home, and they're looking at selling, they're looking at doing a 1031 exchange. What's the implication from a perspective, like a tax perspective for them, or from an estate planning perspective? So what are gonna be the consequences of doing this? So having someone like me on your speed dial is great because you can get your clients' answers really, really fast. And so that's how I work with agents, is really on a, hey, I'm gonna give you a call, what can you do for me, and answer questions.
Any questions from the chat or out here? On all of that? Not so far? Okay, let's dive into case studies. This is where I get excited. So like actual people, right? And what the situation is. So people that we're seeing out and about. And if you have a client right now that, you know, is kind of on the fence of buying, tell us your scenario and we can kind of give you a few avenues.
Love that.
So case study number one, this is an elderly couple. They're looking to retire, but they're both still employed. So this is a lot of the boomer generation right now. They're sitting on a ton of equity, so their house is worth 800K. They own a business and the building that it's in, they have no additional retirement plan. Okay. So,
Yeah, so for this type of client, one of their main concerns is, okay, I've had income all my life. I had this business that was creating cash flow. Now what? What do I do in order to provide cash flow? So there's several different strategies that we'll go through, and one of which can be keeping the business, finding someone to come in and take over the business, but you're charging them whatever, you know, to pay you out. There's, you know, notes that can be for 10 years that they get payments from. But a lot of people at this stage are just done, right? Like they just don't want it anymore. And so they're looking to get out of the business, sell the property, just be completely done. And so after talking to people, I create income streams for them. So like for this guy, for these people, like, do you want guaranteed income for life? If yes, annuities are great for that. That's what they do. They basically create like a pension for your lifetime. You can do it for you and your spouse. So there's ways to structure it. Or you set up a dividend portfolio that's paying you out dividends every month, and that's supplementing your income with Social Security, with pensions, whatever else you have. So it really is a matter of preference, but through the planning process, finding out what those pain points are, how conservative are you, what do you need, what's your guaranteed income need level, and providing that income at that point is usually the biggest one.
mhm.
Do you find that as people are older, the people looking at this,
Mhm.
it's a change in life, I would think, right?
Oh, totally.
You're all like build.
Mhm.
Now you're like subtract. To me, that'd be a big mind shift.
It
Because
is,
that means the end of my life is near.
yeah, well, and you, like, most people have never retired before, right? Like, it's the most nerve-wracking time of somebody's life. Like, my parents are going through this right now. My mom just retired a couple months ago, and that switch from she has money coming in every month to now we actually have to go to our little nest egg and make that into something. It's a huge it's a mindset shift. And it's important that you have a plan in place, because just like hoping that it, you know, manifests
Yeah.
is not a great plan. So having, yeah, it's an important conversation, and most people, it takes like 5 years for people to like feel comfortable with the plan and feel good about it, and then implementing the plan is great.
I just know on the mortgage side of things, I think it's difficult, not difficult, but from my mom's perspective, the same thing,
Yeah.
right? So she's like, hey, I need to pay off the mortgage. Well,
Mhm.
we're not paying that off.
Right,
What we're trying to do is minimize the actual cash flow you have to pay each month.
right,
And that's just a huge mindset.
it is,
And it's like, what? You don't want any debts. Yeah, but don't you want to use those funds for something else?
right.
Travel?
Well, and that's the piece is it's everybody's different and everybody has different wants and needs in retirement, right? Like, this isn't a one size fits all solution. And so you just have to know like what people need in retirement, but it is a huge change. Like you work all your life and then one day
Yeah,
you're like,
exactly.
and done. Like that's hard.
Yeah.
And we don't want you going to Walmart to be a greeter, so.
Nothing is agreed.
Yeah.
And you know, if they're thinking of downsizing, right, they're
Mhm.
sitting on this huge house and they don't need to be close to their business any
Mhm.
longer. Maybe they want to do something different. There's a few different programs that we have that you can utilize to downsize.
Yeah.
So one is if they had children, children could buy them a house, and put it under their name.
Mhm.
And then they would just need to qualify for that. And parents can live in that house and the money's moved to the children
Yeah.
through that. There's also a reverse mortgage as a purchase. I don't know if anyone's seen that in the marketplace so far. Have you heard anything on reverse mortgages? Okay, so it's pretty sweet. It keeps your monthly liabilities pretty low. I have an example on this next page here showing a scenario of what it would look like to downsize using the reverse mortgage for a purchase and how you would hold on to more funds. So the sales price of their old home, 500,000, then you have your closing costs, so net proceeds would be 460, and then their new home price is 350. So they have 110, and that's just a standard mortgage and not a mortgage, paying cash for their house. So downsizing with the HECM, they don't have to bring as much funds and they get to keep as much. So they're financing the rest, and then the HECM, basically, it all has a calculation based on the age and, how much money they need to bring to the table.
Yeah.
But basically, all they have to pay for moving forward is just property taxes and homeowners insurance.
Yeah.
And then their children still have first rights on the home. They can decide once the parents pass if they want to take that on and purchase it, or if they just allow it to go back to the bank.
Yeah, I will say on reverse mortgage from my perspective too, it's a really important thing, especially in this area. As property taxes continue to go up, I have had a lot of elderly clients say that they need to move because they can't afford property taxes on houses that they bought in like the fifties and sixties. And this is a perfect solution if you have clients that are in that, they want to stay in their home. They want to die in their home, but they can't afford the property taxes. These are great solutions for that purpose is looking at reverse mortgages. So if you hear clients saying that, that's a great conversation starter for that.
Yeah, and you can do a refinance into it, a reverse mortgage. It doesn't have to be a purchase.
Yeah.
So great solution for a lot of people that are kind of constricted money-wise. For this case study that we have, if he's able to sell the business and do all of that, and they want to keep more cash to pass down, but not necessarily a house, then this is a great option for them. Any questions on that one so far? Anybody in the chat? Nope. Okay, let's go.
Sorry, Leah. What does HECM, what does that stand for again? The
It's home
it's
equity.
a reverse mortgage, but
Yeah, it's a home equity conversion mortgage. It's a reverse.
conversion.
Yeah,
Gotcha. Thank
Yeah.
you. Thank you.
of course. And I can send you a little flyer on that too, that goes through the different options and how people kind of qualify. Big picture wise, there's a lot of parts to it. But it's a great option for people that are downsizing and have a ton of equity and not much in like retirement plans or savings.
Gotcha. Thank you.
Of course, yeah.
And age requirements for reverse mortgages are 62, so they have to be older than 62 for that.
Mhm. All right, so the tech employee, we see a lot of these up here. So this is kind of a newer tech employee. He's been at his job for 2 years. Most money is tied into his 401ks. He's got RSUs. Oh, he's got a lowercase I, IRA. That's a typo, just IRA. He's a first-time home buyer and he wants to make a smart decision on what assets to use and become a real estate investor. So he's still kind of building his net worth, but he's got stuff. He doesn't have anything really liquid. And he's got a little bit of a 401k.
Perfect. Yeah, so when we look at especially tech people in this space who are wanting to become real estate investors, which is constant. Usually tech people like real estate investment, especially in this area, which is awesome. But there's ways to access your money that's tied up. So first and foremost, if you have a traditional IRA or a Roth IRA, if you're doing your first time home buyer, you can access $10,000 of that money as a down payment for your first home. And you don't have any penalties for that. So typically, if you access money out of those, there's a 10% penalty and you have to pay taxes on that money, but it's waived for first time home buyers. So that's a really big thing. And then for the Roth, if you have more money in there, so if you've contributed, let's say we have a Roth IRA with $20,000, and you use your $10,000 first time home buyer, but you've also contributed $10,000 into that Roth, you can also use that other $10,000. So Roths are great for first time home buyers. So be asking those questions. If you have first time home buyers, do they have these assets that are typically like a traditional, retirement asset, but they can be used for that. The other one is 401ks. You can take loans off of your 401ks. You don't have to sell any assets that are in them. You are just loaning basically yourself money in order to purchase a home. So the rates for those are typically a lot lower than borrowing money from other places. So like right now they're around I think 5.5% is what I saw a couple of weeks ago. So loaning yourself money, you do have to pay it back, but they're really flexible for paying the loan back as well. So in this case, that would be a great thing for him to look into. One other thing that's up here that I will touch on, and we didn't say if he had life insurance or not, but you can also do very similar to the 401k loan. You can actually take out a loan against your life insurance if you have cash value, which is a great thing, especially if you have people who are business owners and have like a large life insurance policy on themselves, and they just have a bunch of cash sitting in the cash value for that policy. You can take a loan out against that and use that for down payment as well. And that doesn't have to be first time home buyer. You can use that whenever. I've had flippers use that in order to leverage flips and take money out, lend it to themselves, put it back in when the flip is done, and then just continue to do that. So there are assets that are maybe tied up traditionally when you're thinking about it, but there are ways to get funds out of them that might make sense for a lot of people.
So you can use the restricted stock units as income as long as they've been pulling them out. You can document 2 months of their statements, use trend of funds. He can move on to his next house with only 5% down and do owner occupied to build his real estate portfolio.
Yeah.
There's a lot of options for him if he has a lot of assets on what we can use. So when you're pulling 401k funds out for down payment and you're taking a loan against the 401k, that doesn't count against you when qualifying for the house. So it's a really good option. Unlike tapping into say like equity of a property, then you have a payment and then counts against you in qualifying. So that's, it's a pretty cool tool. Life insurance, like a hard money loan.
Mhm.
I haven't had the pleasure of documenting that.
Yeah.
Yeah.
Yeah, they're pretty cool. I think it's a pretty rare thing because a lot of people just don't know that they
Mhm.
can do that,
Mhm.
or they don't know that their life insurance has cash value.
Mhm.
So, if people have, what are called universal life insurance or whole life, policies,
Mhm.
those have cash value.
Mm.
Term life does not. That's like car insurance. Like if you don't die, it doesn't matter.
Mhm.
Others will, they have death benefits that last as long as you're paying premium. So those have cash value. So if you have people that have those kinds of policies, those will have some cash value tied into them.
Mhm. Any questions so far? On assets, life insurance? It's a lot of terms right
Fun
now.
strategies.
Yeah.
But the idea is if you have these are options.
Yeah, totally.
So the idea is like when you hear somebody say like, oh, I don't quite have enough for down payment, then, start talking about different like retirement plans
Yeah.
that maybe the employer has 401k match and, there might be more options of them being able to access these funds, even if they're not a first time home buyer. That they're, sometimes people carry some debt, right? And they're not qualified for as much. So you can do a 401k loan, pay off some debt, and then it doesn't count against you, and you can qualify for more on the house.
Yeah.
So there's a lot of really cool strategies that we can use, and it just takes a credit check and kind of going through the conversation, but yeah, I mean, it's just a good question to ask, like, okay, other assets, 'cause a lot of people just think they have to have it in a bank
Right.
account.
It doesn't need to be a liquid asset, like 401ks are illiquid, but for housing opportunities, there are some really cool strategies to
Mhm.
use. But people don't think of that, and a lot of people don't know that they're able to do that too.
Mm-hmm. And taking out your IRA and then putting it back
Mhm.
afterwards is a good one too.
Yep.
Yeah. All right, so we've got case study number 3. A young single, I should have person, maybe I'm not.
Human, single
Yes,
human.
Single, has just landed first job out of college. He wants to keep his expenses low on his first home, and parents have a ton of equity in their home and want to help. So this is all about gifting funds, maybe purchasing a multifamily unit property. And he doesn't really have any assets yet, so we want to kind of get him started on a plan. So this is great when you start talking about these different investment strategies, 401ks, employer match, how to access them, life insurance policies, IRAs. So when you're qualifying for a multi-unit, remember, you can use the supposed rent to offset the payment and qualify for more. So that's huge for people, and they've just changed it so you can do a conventional property, 5% down on 2 to 4 units. So it's a huge, huge deal. That'd be a great option for him to have a roommate and do that. And he can claim the income and qualify for more on his next purchase when he wants to become an investor.
Because before, it was what, 25% down?
Yeah, it was 25.
Yeah.
Yeah, and then,
95.
yeah, and then FHA 3.5, but anything over 2 units, you have to do like a stress test to cash flow the property to qualify, so. Anyway. This would be a great time for him to look at some affordable lending products. There's a lot of cool ways to work free money or lower down payment systems, and get mortgage insurance lower, or you can get a lower interest rate because his income might be, under the 100K limit. Under 90K is kind of the perfect little spot where somebody can get great value, lower interest rate, and they can be gifted funds to help qualify from their parents. And then you have some financial advice for the person starting out, right?
Yeah, I think, these people typically say that they can't afford something. That's what you guys as agents will hear, like, oh, I can't afford, you know, my home. My parents want to help, but I can't afford to do anything. And this is actually when I love starting to work with people, because if you want to be a real estate investor, you need a plan. It's not just like, you know, throwing spaghetti at the wall and hoping some of it sticks. It's really seeing what you want and how you're going to get there is important. And if you start at the beginning, seeing that plan come to fruition is a lot easier. So starting out, if he's doing, you know, this multifamily, he wants a 2-unit and his parents are willing to help him with the down payment, then what's next? Like, how are we going to utilize what we just did and make it into what he actually wants out of, you know, his big picture? Which maybe it's just that he wants 2 units and that's totally fine. And then it's how are we saving for other things that we want? So, this is my favorite time to start working with people is when they're getting started on the investing process. But making sure like he knows that he needs to be maxing out his 401k if he can, and getting the max match from employers. A lot of people, I just read a study, 60% of Americans have a match that they leave on the table from their company. And that's insane. It's free money. So just knowing those things and being able to invest in yourself and in your future is really important.
Yep, and then setting up his plan for, you know,
Yeah.
next time, the
Yeah.
401k is kind of part of that, and
Right.
having the match
Right.
there. And
Having the strategies for the next one. And
Mhm.
if that's the part of the plan, then how are we gonna do that? What does that look like?
And like a savings for any,
Right.
Yeah.
Yes, emergency savings.
for becoming a landlord. Yeah,
yeah.
that's a big conversation I'm sure you
So-
have with people.
Yeah.
Yeah,
Emergency savings are necessary before I work with people.
yeah. Oh, and then these are some of the affordable lending programs. So Kelsey's a big fan of the Arch program.
Yeah. I guess I can talk a little bit about it and then you
Yeah.
can too.
Yeah.
I actually bought my house through Arch a few years ago, which was awesome. And if you don't know what it is, it helps people get into their first house, and at a lower rate. And there is an income cap, so, they have to be under a certain amount, which is that the one at the top?
Nope, that's mine.
Okay. I think Arch is pretty close to the same.
Probably around the same.
Yeah, it is. It is. Last time I checked, it was pretty close.
Mhm.
But Arch is great. You have to qualify to be a part of it. But there's houses all over East King County. So if you have clients who think that they can't get in because the prices are just too high, Arch prices are a little bit lower than normal, in really nice areas. So, just be cognizant of that program and be willing to do some research and help your clients know what they're qualifying for. Even if it's not a first-time home buyer, but it's like an elderly person who might have rented for like the past few years and qualify as a first time, those are great as well. Like a lot of my neighbors are in that category. So, Arch is great for both of those types of situations.
And the Arch program, they list the houses. So
They do.
They're the ones who kind of control it, and then there's kind of caps on the amount of gains that you can have and appreciation if you ever sell.
Yeah,
You can't rent eventually later.
right.
There's a lot of different rules for it, but it is a great place to just at least start building equity,
Totally.
and it's more affordable. And then there's another program, which is the House Key Opportunity. This one's great. So the income limits are here for families, right? So if you see somebody making under 90K or so, this program has a lower than market interest rate for their mortgage. And then they can also get a $15,000 down payment assistance that sits on the second lien position. So if they ever sell or refinance, it has to be paid back. But what's really cool is you can be gifted any amount of funds and still get that down payment assistance just to get your payment in the right spot to qualify. So there isn't as much overlay on like the interest rate, mortgage insurance, they keep it all lower. It's a great program. If you see anyone making under 90K, highly suggest this one, so.
I will say with Arch too, I forgot to mention, you can have a co-signer with you that doesn't have to live there. So if you have, like in the situation we just talked about, the kid whose parents are gonna help him. Obviously it could be a multifamily, but if he's just
Yeah.
looking to get in, if you can have a co-signer that doesn't live with you, help out with that. Their income counts for the mortgage, but it doesn't count for qualifying for Arch. So it's really nice for that. And then the other thing is like Arch, you just have to tell them that you're listing it. They don't necessarily like do the transaction. So like you have to use an agent to sell them and to buy as well. So it's also kind of a good marketing opportunity if you're wanting to look into those spaces.
Yeah. Any questions so far on the affordable lending stuff?
And Arch is a great program. I've sold a lot of Arch houses. Arch is a great program if you have a client that knows, especially first-time buyers, right? That's actually kind of the premise of it. It is not a low income program. It is an affordable housing program.
It's to get
which
people
is
in.
To get people in. And the way I sell Arch to a lot of my clients are the following. It's a program to build your equity. You build your equity for 2, 3, 4 years. You make 100, 150K, whatever the appreciation is. You get that money, now you have a down payment for your dream home or the next home, step up home you have. And it works out so nice. The only catches and caveat is you do have to sell it to another person in the Arch program. The other caveat that I like that is good is even for transition housing for, older folks. I had one particular client that had just had gotten reduced income. She'd just gotten laid off. So it helped her get in under the guideline. Remember, once you're in, they don't get to take it away once you hit your threshold. So get people in when they're about to get their job or are going to make more money, or maybe they just graduated from college and they still don't have the job that they're going to have in like a year or two. So you can get them in while their income is lower. And then, a month later, they end up tripling their income. They're already in. So it's a really solid program. Like I said, I can't speak by the hardship, so.
And I'll say like, just from personal experience, having gone through it, like, one, I was the person who had the income that was like just below, and then 2 weeks after I closed, I got a raise, and so it put me over. So being close is great because you can qualify. But the other thing with the equity, like a lot of people think that, oh, you can't like gain as much equity in Arch houses. But I bought my place in 2021 in October for 370,000, and I could sell it for 550 right now under Arch. So like you can get gains, and they look at the market and what the market calls for that kind of space. It's not like, oh, you can only now sell it for 400,000. Like they let you sell it for market value. So it's a great program for building wealth through real
Must
estate.
have had a good agent.
I guess I had a good agent.
Yeah, and this opportunity down payment assistance program, super great for somebody just getting out of college too. It has a lot of lower reduced costs.
Love it.
Yeah, and the income limit isn't super low, but it's
And the requisites are very light.
yeah, it's just it's a class, a few extra documents.
Yeah, it's very light. It's very easy to get.
Yeah. And if they can get gift funds to help qualify, huge, yeah. So I think, were we gonna go through how
I
you show
can.
it? How much time do we have?
We have plenty of time.
Okay.
We can ask.
Yeah. Do you wanna see a kind of software that Kelsey uses to show financial plans?
I'll show you, so I'll show you guys, I'm gonna show you guys my parents' financial plan, because they let me do this all the time for them. But just to show you kind of my process and what it looks like. See if I can remember all my stuff.
I always like the tech side of things, like
Yes.
how to show it and display it. Not quite Aaron's, but.
All right, my lovely parents. So what I want to show you guys is, so these are my parents, they're 65. My mom just retired, my dad's still working. I'm standing in front of you. Parents, sorry. And my dad's a teacher, my mom was a nurse, they've done a great job of saving. But one of the cool things about this software, you can see like the downtrend of this month and their investments and net worth. So the market has gone down. And so it tracks it daily. So, clients can come in here, they can link their accounts and they can see like what's happening every day, which my father does and drives me absolutely bonkers. But what I want to show you guys is a cool, space. I call it the sandbox. This is the decision center. But basically when I go through with clients and I find out what they actually want and what they need in retirement or just in life, and what different decisions are being made. What I can do is I can do what if scenarios for them. So you can see on the left-hand side, all of those are different what ifs from their normal plan that's actually being implemented. So one of their things was, and a question I get all the time is, okay, so at what point should I take Social Security? When should I do that? And the answer is different for everyone. But what it does is it shows them what their portfolio value would be in a scenario that changes. So if they take it at age 70, their increase, I'll show you down here. So from their normal plan, if they took it at age 67, which is their full retirement age, 66 and 8 months, if they take it at that age, it's fine. They're getting income. They're not pulling income off their portfolio. However, if they both delay until age 70 and they live to be 90, the value gained from their portfolio is about 1.5 million, which is huge, right? So it helps people make decisions. And I don't have a house thing on here, but I could put like, what if we were buying a house? How does that look? But I just wanted to show you guys what this looks like, in terms of, being able to play around with different things. One of theirs, my dad wanted to see like, what if we spend less money or what if we spend more money? What does that actually look like? So this was dropping their living expenses from 140,000 to 120,000. So just spending 20,000 less a year through retirement means that they're going to have about $2 million more at the end of life, than they would have if they spent $20,000 more. So these are the fun, different things that I can show clients and kind of play with in the sandbox to show them, what it does to their plan overall. Any questions about this piece? It's kind of a fun software.
So if somebody decided, hey, we're gonna delay Social Security or income from our annuity, till we absolutely have to, then they can play around with that
Yeah,
and see how much they'll
yeah.
actually have, or if they're planning on gifting funds to help
Totally.
their kid. buy a
Yeah, so I
house or-
actually have I have a gift here. So this is my sister's kid. So
Mhm.
gifting to my sister, like, for their kiddo, doesn't do anything to their plan. They're giving, like, I put $10,000 a year going into their plan, does nothing to them. So it's just like, they get to see, like, what does this actually do?
Mhm.
I can build in reverse mortgages in here. I can do 401k loans in here. I can show like what all of the impact is to your actual plan.
Net worth.
Yeah.
Life plan.
Yep.
I think that's the hardest part for a lot of like the elderly is like what this decision is actually gonna cost
Yeah.
me or what it means and
Yeah.
how do I do it? Where do I go?
Well, and we're so programmed for opportunity cost in this country of like, okay, what is this actually gonna cost me in the long run, right? Where this shows you what it actually will cost you and what the opportunity cost is lost or gained from doing those things. And this is just one of the graphs, like I can show you like tax consequences of all of these things, and that's also a big consideration. So, you know, like me selling my place, like what's the tax consequence? Well, I have to sell it before 250,000 of it in, because I don't want to pay capital gains on it. So those are all the considerations that go into these types of things. And when you're first starting out and saving, what are the tax implications later of what you're saving now? So those are all fun things, fun pieces in here.
And could you build out models for investors?
Yep, I can. So I can build out models for properties. I can build out models for income coming off of those properties. The taxes are all built in as a separate line item for every property. The expenses are built out for every property. You can have business interest. So it's very, very customizable for everybody.
So even if you're real estate heavy, you can.
Totally. I think especially if you're real estate heavy, you need to have a plan because it's not traditional, right? It's not like, oh, I just have this money invested in the market and I can see it every day. It's in a building. And what does that actually mean to you in the long run?
Yeah, that's super cool.
Yeah. And you
Yeah.
can sell them in the future. Like, you know, you can say, I'm gonna sell my building in 20 years from now for, I think, this amount. What's my tax consequence gonna be? Or I'm gonna leave it in a trust to my kids, and what does that do to my estate? So, some pretty cool.
So you can do a depreciation schedule,
Oh, yeah.
knowing that you're gonna sell it
Yeah.
in 20 years.
Mhm.
After the depreciation's gone from the building, and then you're gonna exchange it out.
Yeah, you can do 1031 exchanges in the software. Yeah.
Can you do like, and we have talked about it. Can you do it where, cause we can figure out the normal appreciation, like just based on historic
Mhm.
account, so we
Yeah.
can do like, if this building traditionally is at 8%
Sure.
equity and
Yeah.
equity per year,
Yeah,
along with the depreciation schedule, and I'm gonna sell it at year 20,
yeah,
and then you can kind of figure out what your equity is gonna be. at that
absolutely.
point.
Yeah. Yeah, so it has schedules built in, so you can make it whatever you want it to be. So even if you're doing like for a mortgage, like let's say you have a balloon payment, you can actually put in the balloon payment has a line item for that, so you can balloon payment out and it'll show that in your financial plan too. So it's very,
So you can actually strategize based on the market, if it's a good time to
totally.
sell it
Yeah.
or hold on to it.
Mm-hmm. Yeah, you can map it out, so it shows like, you know, this year it's returning this, is it a good time, this is my equity, and it'll show you all of it. Yeah. And we have plugins for Zillow, so it actually like takes like data from Zillow, which
Oh,
is
that's
kind of
fun.
nice, and
Yeah.
clients like to see that. So it's updating as the market updates, like it's tied into.
Does it do that with like rental properties, like
Yeah,
market
as
rent?
long as you have an address, it'll
Okay.
do that. So for rental properties, like it'll take the actual property that from Zillow, from, you know, just the address,
Mhm.
but then I'll put in the income that's coming off of that property and you tie it to the property.
Yeah.
So then if you're adjusting it, like, let's say you're like, oh yeah, I raise rents 2% a year,
Mhm.
it'll tie it to being 2% a year and it'll flow into your financial plan.
Oh, nice. Yeah.
Pretty cool.
That's pretty sweet.
I can nerd out all day about this stuff, you guys.
Pretty sweet.
Yeah.
Yeah. Any other questions or thoughts or scenarios or?
Zoom world.
Yeah, Zoom world.
It's all left on the scene.
They've all left.
All good.
Are we? Are we too monotone?
No, who's on Zoom?
You wanna
Eric's
know?
on Zoom.
Can't think of anything. It looks like a cool way to strategize.
Yeah,
Big picture planning. And then I'll send out the reverse mortgage tidbit. I think that's gonna be pretty helpful for a lot of people to see how easy that could be. And then, 'cause a lot of people don't have too
Yeah.
much other than equity in their homes.
I think the reverse mortgages in the next 5 to 10 years are gonna be a really, really big market if you know your clients and can speak on it to them. Because as boomers are aging, like it's really, especially in this area, it's gonna be a really, really big thing for them. And if you know it, like they're gonna be your.
Yeah. Just the affordability.
Mm-hmm.
Mhm. And why pay all cash?
Exactly.
Why? So,
Lovely.
lovely. I think that's all we have for today. Let me see if there's another slide. I think that was it.
That was it. Yep.
Yeah. How do I get back to? Oh,
Great
it's because that toolbar is there.
There you go.
Yep.
Awesome.
Thanks for coming, everyone.
Thanks, everybody.
Yeah.
Thank you.
Thanks, Kelsey.
Thanks.
Stop share. And then we've got.
You can hit stop recording.